U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today I want to talk about the warning signs about the economy that's going in the wrong direction in the short term. Three major things that I want to talk about today. First is the overnight reverse repo finally hit $1 trillion for the first time ever last Friday. Second thing is that the eviction ended, where it couldn't kick you out for not paying because of the whole COVID. And the last thing is that the debt ceiling also ended. So now we have a lot of things that are negative, right? But what do you do in this time, especially in the short term? Well, the go-to solution is always to enter the FANG stocks. F-A-A-N-G. That's Facebook, Apple, Amazon, Netflix, Google. These are big tech, reliable, and these will always only go up, especially over any period, short-term, long-term, medium-term. It won't go crazy. It's not going to explode. You won't 2x to 5x your money overnight or even over a year, but it will possibly 2x over a few years, and that's solid, reliable, and that's kind of what you want to hold up as a pillar of your portfolio so it won't be volatile, right? Now, another thing you could do to play this potentially upcoming volatility is GameStop. Now, GameStop is great because it has high negative beta, and it's hovering around, I think, 150 now. And again, the stock has always been going up and down. It seems to find low resistance around 120, 125, then a higher end resistance around 250. Now, if you play it right, you can keep getting these swings, and it's just been going up and down for the past 6-10 months. This is also earnings season, so it's important to take note of what is happening, what is shifting during these earnings calls, because as numbers are being released for the second fiscal quarter of 2021, we're seeing companies now provide guidance for the future. They have their numbers, how they've done well so far in the pandemic. Things are opening back up in this first half of the year, 2021, and where they see those numbers going in the second half of 2021 as reopening becomes more and more normalized. And even with the rampant uptick of the Delta variant of COVID, it's nothing really to be worried about. I believe if you're looking out at the second half of this year, I think you might still see a steady increase, but we're nowhere near what shut us down, right? There was a lot of fear and uncertainty that caused us to shut down the first time of COVID. We understand it better, and there's a lot of businesses are opening back up, and it's really a lot of positive signs pushing that we're gonna kind of see in 2022 almost normalizing what's happening right now, and it probably won't be a big deal. It's COVID, we'll see what happens. That's kind of, I guess, everybody's hope for the economy and the stock market. Of course, it could go the other way, and that's why we kind of have to, hedge our bets against more volatile stocks. Earnings seasons, things to look out for. Two companies I'm looking out for this week are Corsair Gaming and Wynn Resorts. Now, on two separate ends, a gaming company, a video game company, accessories for video game and streaming company, esports, all of that things is huge. It's a growing company, but also a growing sector and market, of course, for years into the future. But the thing is, we were gonna wanna look at how all these other video game companies have been performing compared to this last year, when we're seeing crazy growth in these companies, right? Everybody was inside, everybody was pent up, everybody had nothing to do. Let's see how the numbers are doing and how analysts react to the numbers released when they provide forward guidance, if it's even possible to reach those numbers again, and if we're going to see a slowdown of growth. A lot of big tech has said that they're expecting a slowdown of growth simply because of all that. Everybody was inside, and now as people go outside, they don't have as much time to spend on their platforms. It's going to be curious also to see the flip end of that. We're going to see Wynn Resorts reveal how their gaming property, their casino properties have been doing over the past 6 months of this year compared to last year. Last year they did nothing, so anything's better than last year, but how they're doing compared to previous years before the pandemic happened, but also how they see us going into the future, right? This could be, how good was the rebound in this second quarter from the entire pandemic when they were really allowed to finally open up. We're seeing gamers go out to Macau, the Las Vegas Strip is opening and doing record traffic now. So, how do they see it going forward? something to look for are in these earnings calls. It's all happening on Tuesday. You can make some earnings gambles if you want to buy before earnings, but regardless, you should be thinking about both these stocks in particular, long term, where you want them to see. These are both great companies that have been hit recently down by not really scandal, but by the pandemic, and again by uncertainty about where they're going to go. The earnings will provide a very good solid resource of where growth will happen over the next 6 months. And I think that these are two great companies to bet on for not only this year, but the coming years. And that's something to always look for, is not only the short-term gains, but the long-term gains. Rebel Leader, over and out.